Have you been trading for a while now and you have not gotten the result that you want? Now here are the 5 common mistakes that even experienced trader can make. Mistake number 1 is investors are too emotional, attached to their stock, and even though they suffer losses, they're not willing to cut loss. The emotion can come because the investors may know that the company that he's investing is a good company, and hence good companies shouldn't suffer losses. And if he's not willing to cut loss, the loss may become more and more until a point of time when he cannot take it anymore and decided to get out at a bigger loss. The second mistake that investors can make is the lack of planning in entering a position, and also there is no journal recording his progress. So there's a saying that you can afford to lose money, but you cannot afford to lose the lesson. And you need to be accountable to yourself as well, the results of your capital. When you have a trading journal, you'll be able to record your feelings when you enter the trade or the feelings when you exit the trade, so that you can analyze your self-talk to check whether you have the winning attitude or the winning mindset that requires of a successful investor. Another form of common mistakes that investors can make is the lack of specialization. In other words, they are not sure about which strategy works best for them, and they will do any strategies that they come across as being profitable. Now, in trading and investing, it's very important to understand your own strengths and your weaknesses. You need to be able to use your strength and avoid your weaknesses in order to help you to make money consistently from the stock market. Another thing that you need to consider is your priority and your life preferences. So not many people, for example, can trade intraday, where you need to be at the market when it opens, and you need to be at the market at least for 2 hours after it opens. Now, it is difficult for people who are constantly have to travel overseas in order to attend to their business meetings. So for busy business executive like that, you will need to choose a method, for example, position trading, where you can spend the least amount of time, but at the same time, you can also ride the trend and make money when the trend is healthy. You don't have to use all kinds of strategies to make money. The best strategy is a strategy that is already making you money and you enjoy the process of doing it. One other mistake of traders is they're constantly looking for a 100% winning trade strategy. In other words, they are looking for the holy grail of trading and investing. And I can assure you that in the whole wide world, there is no strategy that can offer you 100% success rate. There is no fail-safe strategy simply because the stock market is dynamic and it is not static. Continuous learning from investing is good, but if you find yourself having this compulsive behavior of having to learn something new in order to make money, this can be a disguise that you do not accept that the stock market is neutral and every trade outcome can be random. Last but not least, another common mistake what investors can make is revenge trade. So you can get into early, lost money, and put in more trades in order to recover your original loss. That is the number one reason why a lot of traders blow up their account. So it is having this kind of stress that constantly inside the trader that he has to handle the stress of fear of missing out by getting in too early. And then subsequently, he has to struggle with this fear of losing money by wanting to get even and therefore putting in more trades. And quite often, the trader will suffer more losses as a result of doing that. So avoid that at all costs. So these are the common 5 mistakes that people make. I'm sure there are more. And now that you know it, and I hope that you can avoid making these kind of mistakes.